What's up, guys? This is Carter Thomas with Coin Mastery TV. Make sure you go and sign up for the podcast. Go to coinmastery.com/iTunes. Sign up there. We're working on Android. This will be out this week. Also, make sure that you go to YouTube and subscribe to the channel. If you're not there already, go to coinmastery.com/YouTube. Hit that subscribe button and then hit the little bell so that you get notified. So that every day when we release these new breaking analytic reports, you get first access to the information and you can stay up to date, make better trades, hopefully make more profits. So make sure you hit that bell. It's really helpful for you. We're doing some daily crypto analysis for anybody who's brand new. Welcome. We're growing quickly and we're going to talk today about a few different things. We're going to talk specifically about Bitcoin this morning, talk about how that impacted a lot of the altcoins. And you're seeing some bounces right now, or, I guess it's Tuesday, August 29th at 10:45 a.m. Pacific. We're also going to talk about some of the macro forces we're seeing outside of the crypto sphere and how that may play into what we'll see in the coming weeks, coming months, things like that. I think that there's a few things that I disagree with some other crypto people out there. So I'll give you my opinion and you can take it for what it's worth. We're going to go through a few of the poll results from yesterday's poll on Twitter about what coins you'd want. And then one piece of news about this new thing called the Ocean, which I think looks pretty cool, and what that means for potentially the continuing democratization of this whole business, which I touched on yesterday with things like the exchanges, which I think is going to be a consistently important for you guys, right? As for both from a regulation standpoint and from a profit standpoint, right? Like, follow the money. So if you were paying attention early this morning, if you were awake, maybe you're in Europe or in Asia and you got to see this in real time, we had another one of these just kind of massive surges that happened. But what's crazy is that it almost looked like a big pump, right? Because you could see this huge pump that happened, and then you saw a big sell-off that came through, and then you're just seeing this kind of up and down, a little bit of jump here, a little bit of sell-off, a little bit of ambiguity, confusion with these markets. When we scroll out a little bit and we go back and look at the last day or two, it's been pretty relatively flat. I mean, it's flat, for Bitcoin at least. And then just had this massive spike. When this massive spike happened, you saw a big dip in a lot of the altcoins, on Bittrex and Poloniex or wherever you're trading yours. And then now you're starting to see that money flow back into altcoins. This leads me to believe that this was a coordinated effort by a bunch of whales of some sort, right? Where they just jacked this price up to see if they could, by hitting an all-time high, if it would domino effect the whole, a lot of new money to come in. Looks like that wasn't the case. It looks like it just sort of got everyone's attention and everyone really excited, but it didn't catch. It didn't get that flywheel effect that from what I can tell, that's what it looked like it was trying to do. And because of that, we saw a big drop and then a very quick recovery back into altcoins. Now, what's going to happen next with this? Hard to say. I think that we're still going to see some continued prices that go up, but I don't think that this is a very good indicator of a big bullish movement. I think that this was a bunch of big time people that were just trying to move things, trying to push that over the edge, if you will. So what this really means for you, and the reason why you should care about this is, one, I think it's always a good reminder that you always want to have some Bitcoin in your vault, right? In your I keep it on a hard drive or a locked laptop. Some people keep it on a Trezor hardware wallet, but you always want to have some that's tucked away, because these kind of things add up and you'll always just get good long-term gains. We've talked about this a lot, but I think that this is just always a good reminder that Bitcoin's always just it's gonna keep going up over the long term. Or that's what, even if it goes down for a few months and it comes back up. I think the other thing to keep in mind is when you see these massive bull runs like this, and then you see a big comeback, it's important to be able to look over at Bittrex and think about one of the big trends that we talk about, or themes, which is not necessarily what's going to happen next or what price is going to happen next. The real question is, where is the money flowing? Where is it going to flow? And when you see a lot of money going into Bitcoin and then a lot of money coming out of Bitcoin really quickly, like you did this morning, that's when you go over to some of these Bittrex markets, some of these altcoin markets, and you see, especially on the first page, like some of the top volume coins, you see them drop really quickly, and then you see them bounce back really quickly, and then they start to normalize. So there's always an interesting dynamic to see, not just with the price of this, but where is this money going, right? There's some sort of manipulation always going on. Where is it going? So that's what I saw. I personally, I wasn't awake, so I didn't do anything. Yesterday, I did that ARC trade. I did a little bit of UBQ, however you pronounce it, both of which went up a lot. Those are the ones we talked about yesterday morning. Pivx, it's kind of doing its own thing, but after that, I was like, I'm just going to let this thing ride because, pull myself back up here. It's a lot. Once you hit one right, it's always, in my opinion, it's always better to take a break and step back, because it's very difficult to consistently make really, really good decisions, objective decisions over and over, especially when you're right, because we tend to think that we're a lot smarter than we actually are after we get something right. So you want to stay grounded, not get too full of yourself. So I didn't have any orders. I wasn't really looking at anything, but if you did, then hopefully you got a bounce. But that's really the biggest thing I think you can take away from this is when you see these huge bull runs, but then you see a big pullback, know that money is going to flow right back into altcoins because it didn't stay in Bitcoin, right? All this is just like the after effect of the big pump and dump or whatever you want to call it. Cool. In terms of actual altcoins to be watching, I really haven't been looking. I will say yesterday, one thing that I did was I retroactively, if you can say that, I went and looked back at a lot of different coins. And I can't remember exactly the ones I looked at, but I think, I guess maybe, what was it? I can't remember exactly what I looked at, but let's pull up OMG because, that's always a good one. And if you scroll out, right, and let's go to 1 hour here, and obviously this isn't the best chart, but what's interesting that I find is that this is not always going to be, like, you can't apply the same analysis on every single chart. And I think as a beginner, myself included, I want everything to be able to fall into one or two technical analyses, right? So I would love to be able to go over here, do the Fibonacci, this is very, very crude, right? Or I guess maybe right here, I would do it too. Like, I would love to just be able to do this, see the chart and say, oh yeah, this fits perfectly in there. I know my buy prices, blah, blah, blah. But this chart isn't really conducive to this type of analysis right now, or like, at least the way I loosely set this up, right? And so that is when you start to add more tools to your tool set where, okay, well, Fibonacci doesn't really paint a really good picture, but maybe if I just do, and again, this is really, really quick. I'm not trying to predict anything here. I'm just doing this for kind of example's sake. And I'm not saying that this is right technical analysis right now, but maybe being able to do just line, peak to peak, this might paint you a better picture than the Fibonacci could, right? And then maybe you throw an RSI in the bottom of there. RSI, if you don't know, that's called relative strength indicator. And if it goes above this top line, that means it's oversold, which essentially means that it's being bought too quickly for the market to keep up with it. And I'll talk a little bit more about RSI over the next couple of weeks as I learn more about it and as I get more specific about this. But my point being is that as you learn these technical strategies, again, I'm not saying this is correct. I'm just saying this as an example. If it's one thing to learn one and go through and try to apply it to as much historical data as you can to learn from a data standpoint. But it's also really important to realize that not every chart is going to fit into the specific technical analysis that you're trying to do. If you only want to see ascending triangles like this, not every chart is going to give you that. And if you just try to fit it into a specific coin, you may start to get data that paints a picture that's not very helpful to you. So I think that's one thing I realized is as I was going through all these coins, I was doing the Fibonacci, and I realized quickly that a lot of these just that's not how you can analyze them. And it made me realize that I still need to learn a lot more so that I can recognize new patterns. I know how to analyze them myself. So if you are out there and if you are getting into technical analysis, and as you learn different strategies, it's really important to remember that not every coin is going to fall into the strategy that you're learning that particular day. And that as you get better, you can learn how to identify different coins. That's also why you may want to focus on a few and not every single one of them, because certain coins may just work better for the kind of analysis you like to do. I think the last thing I would say about that, one thing I'm finding is that, and this comes from talking to a bunch of people who do technical analysis and from reading a bunch of guides and watching a bunch of YouTube videos, the fundamentals are really cover a majority of everything you guys need to know. Right? I mean, ARC, I'm just pulling this up just as an example, but the fundamentals of where resistance, the level of resistance was, right? I don't know why this line isn't coming up right now. Or if you just did a Fibonacci on this before it started to go up, just being able to put a few lines on a graph is often more powerful than having 900 things on a graph. That's kind of the long story short that a lot of investors and technical guys have told me. They just said, nail the fundamentals on a few of the different chart patterns and just get really good at putting those on graphs. And that's going to be really helpful. I really think that going back, I do this at the end of each day. I go back and I look through random coins and I just try to do a chart and see if it follows, if the future data follows what I just did. And I would recommend that to anybody who's trying to get into this stuff. All right, a little bit of news coming in. So we saw this, right? And at first everyone's like, oh man, the mass market's happening, we're going big. The hedge funds are joining the party. I don't think that's what happened at all. I think that it was a bunch of big whales who are already in the Bitcoin world who are trying to push this thing up. Now you may have seen this news headline floating around Twitter or Facebook or wherever you get your news. And it's on CNBC, and the article is called "Investors Pull Billions from the U.S. Stocks in Largest Outflow Streak Since 2004." About $30 billion. What this is saying is that the overall market cap of the stock market is losing money. Money is being pulled out of stocks more so than it has been in 13 years. And it can just be going into new assets. It could be going into bonds or gold or crypto or whatever. But wherever it's going, it's just being pulled out. Now, as crypto people, everyone's like, of course it's going into crypto. These investors, they want to be in our party so bad. Of course they're putting money into crypto. Like, who could ever resist these returns? And I think that's a little short-sighted and even misguided. And the reason why is because institutional investors, especially very competitive institutional investors like hedge funds and private equity and investment banks and all that, yeah, they care about returns, right? They want disproportionate returns, no question about it. But they care way more about not losing money. And while crypto has a lot of really attractive upside, I mean, the most attractive upside, it also has the biggest potential to go down. And that is the reason why I don't think that this 30 billion is going in. And if you read through this article, what you find is that actually a big majority of this money went over into Asian markets, right? Into emerging, to European, to Japanese and Chinese, to different Asian markets. It did not go into crypto. But when you go on Twitter and Facebook and YouTube, you see all these people talking about how, of course, this money is coming to crypto. Like, this is the big new thing. Instead of looking at the real macro picture and thinking about the actual people. These are actual men and women that are sitting behind trading desks who are putting in sell orders on stocks, having meetings with their bosses and saying, where should we put this money? And cryptocurrency to them is still way too risky. They don't care that it can go up 100%. They care that it can go down 30. And that's the thing, right? That's the real game changer. That's why I think that the big catalyst for big money is going to be that derivatives market, which is coming in September, which is going to be the ability to buy options, hedge your bets, all that sort of thing. So the reason I think that this is important is when you hear news that it's easy to tell yourself a story to make that news what, you know, to create the backstory behind that news, to what do you call it? Like self-confirmation or confirmation bias or whatever you want to call that. When in reality, like the reality of it is that these guys are just putting it into potentially new markets that may provide better returns without the risk, right? In their case, emerging markets or European or whatever it may be, right? They're betting against the US dollar in many ways. So I think that that's just an important thing. You don't want to drink your own Kool-Aid too much. You want to believe in where you are and what you're doing, but you don't want to, you know, get diluted on it. Now, similarly, what's interesting is that gold had an increase of, you know, by gold standards, excuse me, a couple percentage points. Now, for gold, this is a big deal. For crypto, it's like you sneeze and you lose more money than this, right? Like you wait 3 minutes and it changes that much. But again, people don't pull out their money. So let me back this up. There's a little bit of a parallel being drawn between like traditional finance and alternative assets. And along the way, Bitcoin got equated to quote unquote digital gold. And in some crazy world, people started to look at, if you take your money out of the stock market, you're either going to put it into gold or into digital gold, which is Bitcoin. So when people see this gold price go up, that also fuels the fire, that they think that there's new money flowing into kind of long-term assets. Now, that to me is hilarious because nothing could be further from the truth. I mean, gold is, the reason people put money into gold is because it won't go down. There's nothing to do with it going up. It's just that it's rock solid. I mean, no pun intended. It's steady. So if the market is volatile, like if the VIX goes up on the stock market, people put money into gold because it's stable. It's not going anywhere. Versus you put it into Bitcoin, even if it's like, if the label is called digital gold, we look at it like a digital storage of money. If the fundamental principle is the same, it does not behave the same as an asset class. So while you might see money going up in gold, that actually has nothing to do with whether people are going to put money in crypto, because this is a stable, very secure investment. And crypto is the least stable, probably the least secure investment you can make right now relative to some of the other stuff out there. I guess that's up for debate, but you know what I'm saying, right? Like from a traditional standpoint. So for you, as someone looking at the mass market, as you get your headlines from Google Finance or CNBC or whatever, or if you're reading this in Facebook groups or on Twitter or whatever, a lot of people who are in this bubble are trying to tell a story to themselves to get Bitcoin to go up, to get everything to go up. They're not being real about what these banks and what institutional investors are really concerned about, which is not losing money. And when you look at it that way, you start to really look at things like the Bitcoin price and the altcoin market as how speculative it still is to a lot of these institutional investors. And we need big, things like derivatives markets, potentially new regulations. We need those kind of protections in place, or at least tools that allow for risk mitigation before we're going to see any real money. So don't drink too much Kool-Aid. Like, I believe crypto is going as big as anybody else does, and I think it will eventually. But don't tell yourself stories that get yourself into trouble. I'm not trying to give anyone advice here, but you know what I'm saying. It's just, we as people in the crypto world, I think it's important to stay not humble, but to just be honest about what we're doing. Like, it is still risky, but it's, I think we can all agree that we believe it's going to go big, but we're still the small fish here. Even if it does go massive, there's still a little bit of, we got to kind of woo these guys in here if we really want the $1 trillion inflow. At least that's my opinion. Okay. Last night, yesterday, I guess, yesterday afternoon, my time, did a poll. You are offered on Twitter. You can go check this out, twitter.com/Carter Thomas. Go say hi. Just crossed 10,000 followers, by the way. Thanks for everyone for that. Super cool. I asked everyone, you are offered $1,000 worth of a cryptocurrency that you cannot sell for 1 year. Which do you pick? And the three choices were Bitcoin, Ethereum, or Litecoin. And as you can see in this poll, 52% said Bitcoin, 30% said Ethereum, 18% said Litecoin. And then you can click through the comments and check it out, which are awesome. You guys always leave awesome comments, really, really good stuff. And I probably could have worded this a little differently, but what I'm really interested in is, because this is a question I'm wrestling with, and I wanted to get your guys' take on it. When we look at a year from now, do we make decisions based on how big something could potentially go, or do we think about what's actually going to be around in a year, right? So originally I had, like OMG, Civic, and 10X, right? Like kind of pretty new, maybe even speculative assets at this point. But instead I stuck to the big ones, which have varying degrees of speculation, but I guess you could kind of make a case that they'll all be around. Ethereum, Litecoin, who knows? Like, I think Bitcoin will definitely be around. But it was interesting to glean off of some of the comments, and also just for myself to think about this question, right? What could you guarantee will be around in a year? And once you've got that dialed in, that's when you start to think about, well, how big could it go? And I think those two questions often don't get asked in that order. We think about, well, how big could it go? And then we start to wonder, well, how long is it going to be around? Like, the idea of a coin just dying, a major coin, something that we all know of, right? That may seem a little foreign or even a little scary. But it is a question that you got to answer, that you have to be honest with about. So I think majority of people chose Bitcoin not only for the returns, but for the simple fact that it probably will be around. But I think many people chose Litecoin because it's the smallest US dollar amount. It has potentially the most upside left. And Ethereum's kind of in the middle. So something to think about, right? And we talked about this, I think yesterday or last week, when you look at your portfolio, which of those are you very confident will be around in 1 year? And if you're not really confident, do some research and try to figure out why or why not, and then make a decision on whether or not you should keep it in your portfolio as a long term, or would you try to trade out of it so that you got your initial money back and the coins you keep are just profit. And once you've established your long-term holdings as ones that will be around for a year, that's when you can start to think about, well, what's the best investment for myself? That is why my long-term holdings are Bitcoin, Ethereum, Litecoin, Monero for now. I mean, and then you got like the ZRX, the Civics, right? There's other ones that I have long-term holdings, but they're still speculative, right? Because they don't have they haven't really hit the flywheel yet. But even this, right? The conservative investor in me even looks at things like Ethereum and Litecoin and wonder, man, I don't know if I would bet everything on those being around in a year. Bitcoin, I think I would. But Ethereum, what happens with regulations and ICOs start going down? Like, is it still going to survive? Litecoin, right? Like, is Bitcoin Cash going to take it out? Or is Litecoin, like, what's Litecoin's use case going to be? I don't know, right? These are just important questions to ask. And so thank you for voting. Thanks for the feedback. That's really why I wanted to do it, because I want to keep thinking about that. I think that's an important question to think about. Last thing, if you didn't, I retweeted this. You should go check it out. I thought this was just really, really interesting, especially this paragraph right here, the second paragraph. If you're listening on the podcast, this is a blog post about the Ocean, which is a new ERC20 token exchange/liquidation service. And I retweeted about this, so you can go see it on Twitter. It's a blog post. And this paragraph where it says, like, our company is a group of cryptocurrency investors and developers with significant stakes in a range of coins and funds, as well as equity stakes in some crypto startups who've been trading cryptocurrency for the past 3.5 years. And we built the Ocean because we need the oceans ourselves. So this is a group of people similar to us, right? Like investors or people that are interested in crypto. And these guys probably have a good amount of money or a good amount of coins invested. And they had a specific problem. And then they used a platform like 0x to build a solution to their problem. That, to me, is really interesting, especially if this can be profitable, or if this can become a business model in some sense. Because you're using the 0x platform to build profitable businesses. That bodes really well to me for ZRX. That's why, as I said yesterday, I'm just slowly going to be buying it up for long term. I don't think it's going to go big anytime soon. But it's because of things like this. And let's think about this from like what we always talk about. These are people making this decision. It's a group of cryptocurrency investors and developer with significant stakes in a range of coins and funds. This is people that are smart, probably, that have a lot of money and want to make something pretty big. Those are good people that you want building on top of your platform, right? This is not a piece of junk. These are really seemingly smart, highly lucrative people. I don't know if that's the right way to use the word. And we'll see. I mean, who knows what's going to happen when it comes out? But it's being endorsed by the 0x team, which is a big deal. And we'll see. We'll see how it looks when it comes out. But if this is the kind of people that 0x is attracting, typically in venture capital and investing, in Silicon Valley at least, this is a very, very, very good sign for the platform in general. It is appealing to the right kind of people, right? This is the kind of people, this is the kind of products that you want to see being built on your platform. You do not want to see people building garbage or kind of scammy, whatever, like crappy coins. Really good products that have a very clear and potentially profitable use case and business model. So I thought this was interesting. Again, this product is not up yet. I don't know if it's any good, but like these are the breadcrumbs you start to see. And when you start to connect the dots between this and the greater picture, which is 0x, and how that impacts like the district 0x, you know, like the whole ecosystem of this ERC20 thing, which is really just a kind of Coinbase's master plan, is to make the world run on ERC20. It starts to get interesting. And I love to see this kind of stuff, this kind of quality, because this is what's going to get the billionaires who live down the street here to put a lot of money into crypto. This is the kind of stuff. And if they're building it on 0x right now, it's not going to stop. Something to think about, you know, who knows. But with that, I will see you guys tomorrow. Make sure that you go and sign up for the newsletter. Get a lot of free info there. You can go to coinmastery.com/invest. And if you're not already subscribed on YouTube, make sure that you hit that subscribe button and hit the bell so you get notified of new episodes. You can go to coinmastery.com/YouTube if you haven't already. Good stuff, guys. Thank you so much for joining me today, and I will see you tomorrow. Peace out.